What if there's no deal to extend the debt ceiling by October 17th and the nation's bills come due with no money to pay for them all? Seeing as Tom Foreman has been taking a closer look into that dire scenario, Tom, a lot of people are worried. Tell us why.
Yeah, well, if they're worried because of this, if you defaulted on your mortgage, if you didn't pay it 1 month, you know the consequences would go beyond your front door. It would affect your credit, it would affect your dealings with the bank, it might affect your standings in the community. In a worst-case scenario, this is what some analysts fear about a U.S. default, that it would set up a domino effect around the world in finances. How would this happen? On the day the government did not have enough money to cover everything it had to pay for, that would push over the domino number one, the default itself, and that would set up a difficult choice. Does the government keep funding fully all the programs people are counting on, Social Security, the military, the Department of Agriculture, everything else, or does it focus more on getting interest to the people who gave it money before to keep running, paying those people back? Either way you go, there are consequences, because when those dominoes kick over, then you have what follows. Consumer confidence, all those people out there who are counting on money, who now don't get it from the government, they stop spending because they don't feel confident about spending. Businesses who are counting on those people to come to them, or perhaps, like a Lockheed Martin counting on big government contracts, they pull back from the economy because they can't count on that money. And of course, the stock market, everybody who's involved in investing on that, they pull back, and that kicks it over to the next level of dominoes back here. Now businesses start saying, we have to lay people off. We certainly can't create jobs in this environment. Investors say, if businesses are in that much trouble, we can't invest in them right now. That means your savings, your 401k, everything else you have in the bank becomes worth a little bit less. And if there's anybody out there who will still loan money to the United States at that point, they say, this is not the safe bet it once was. Our interest rates are going to be much, much higher. And because the United States is really the cornerstone of the world economy, that could keep rippling beyond U.S. shores around the planet to many other places. Now, people can argue about whether or not there are stopgap measures or whether or not all of this would happen or on what timetable. But the bottom line, Wolf, is everyone will agree on this. It's a lot easier to push these dominoes over than it is to ever get them back upright again.
Well, it's a good point.